So today's GDP print was much weaker than expected. And the major demand items such as consumption, the capex, exports were all weak across the board. But so yeah, as you say, so we remain constructive. So from Q4 of this year and onward. So based on a couple of factors. So firstly, so finally, the Japanese government lifted the state of emergency so nationwide. And thanks to some big progress on the front of so vaccine rollout, so virus situation so improve a lot. So as a result, people's mobility is moving up, right? So this is a push up to the consumption going forward. And also, so today's so GDP print shows that so maybe the supply chain disruption so a spillover. So not only to production, the export, but also so to capex number. But so I think so the worst of a supply bottleneck so seems to be behind us. Although we expect so supply chain so return to normal. So maybe so it will take so another 6 so 7, 8 months. So that overall, so we expect so a demand to come. So from Q4, we still expect a 6.8% growth on Q4.
I understand that. I'm just looking at your report, and we're talking about sharp decline in capex. You've already spoken about consumer spending and exports, and exports was one leg of the equation that was still holding up. You've seen a sharp downturn there, Q on Q, annualized in Q3 of minus 8.3%. If the U.S. continues to recover and continues to look strong, then do you see a leg up in exports, or I mean, where's the impact really coming on the export side, and how can that resolve itself? Because China, of course, is slowing down, which is one of the key markets for Japan.
Yeah, I think the overall demand conditions remains okay. So although we are seeing the slowdown in Chinese growth, but as you say, so U.S. is expected to recover going forward, and same is true of the Asian nation. So overall demand situation remains okay, but so in Q3 of 2021. So supply side so matters the most, yeah, right? So that's why particularly the automakers. So we're not able to produce enough products. So even though there's ample demand there because of the shortage of intermediate goods, including semiconductors, yeah. But so I think the worst is over. So if you look at the production plan or Toyota and the other automakers. So they tend to have a bullish plan toward the end of this year. So this is indicative of that. So maybe worst is over.
Would Japan finally see inflation, Naohiko, because of the supply chain disruptions?
Yeah, we expect Japan's inflation rate to pick up to the 1.5% and toward the middle of 2022 on rising oil and other commodity prices. So together with the reopening effects. So that says the 1.5% number is very low compared to the other nations like the US and UK. So it's because of a very low trend growth of wages. And that is why we think Japan's household sensitivity, the price hike is very high. And knowing such a demand supply dynamics, so Japanese companies try to refrain from rate hikes as much as possible. And try to absorb rising costs by themselves.